Hi, people. Thank you for stopping by at Building Wealth with Rajeev. One of my mission is to bring you the opportunities which benefit you. Obviously, you have to do your homework because it's your hard-earned money. In that spirit, could Upstart be the next bagger? I had a chat with Louis Stevens, who runs a service called Beating the Street on Seeking Alpha, also is top 1% financial blogger on TipRanks. He thinks AI-based credit lending is in its infancy and it has legs to go, and Upstart is a top dog. I hope you enjoy this discussion. If you like it, please make the video viral. Subscribe to my channel and share your views.
It's been an evolution. At this point, I've shared on Twitter that I've kind of stopped buying stocks and I'm only buying mindsets. A quote that I really, or not a quote, it's not exactly a quote, I'm paraphrasing Jeff Lawson. But Jeff Lawson once said in an interview with one of the all-in Jason Kalakanakis, I can't pronounce his last name. But Jason, with an interview with Jason, he said that a CEO or a company is an amplification of a CEO's traits. And at the time I was buying Twilio, it was becoming my largest position, based on how intelligent and how competent and how almost Zen-like Jeff Lawson was and still is. If you look back at Jeff Lawson and the way he thought about his company from 2009 or whenever he founded it to today, he was constantly in the process of consciousness programming. Like, you look back at interviews from 2014, 2015, 2016, and he's talking about, principally on YouTube, you can find it, he's not talking about the technology all the time. I know that he was doing road shows and selling the company and the core technology, but the value he was bringing to the community wasn't just that technology. It was so much about elaborating the way that he was building the collective consciousness of his company, building the psychology of his company. So I think that's a major factor in the way that we assess companies, the way that I assess companies. I think taking it a step further, we have a crucial characteristics checklist, which entails 23 criteria.
Tell me one thing, which are the companies or which are the consciousness, for example, are you looking at right now, let's say for next 4 or 5 years, what are those big ones?
Yeah, so, I mean, of course, anybody that's following me on Twitter, anybody that's following me on Seeking Alpha knows, or, anybody in Beating the Market, everyone knows that I'm extremely big on Upstart. Upstart's just so interesting because when we first started buying the stock, like, truly, I embodied this everything that I've said. I really focused on it. Like, I studied Dave's psychology, I studied Paul's psychology, I studied Anna's psychology, and I just I became very intimately aware of how these individuals thought and think today. And even in the chats, I remember saying specifically, I don't know how well Upstart's going to do ultimately, because everything's based on probabilities. I can't guarantee anything. Nobody can. Life is not guaranteed tomorrow. But I said that I know Paul so well at this point from just studying him for weeks and months, that I'll probably be attending his Thanksgiving dinner this year.
Paul is the co-founder.
Paul's the co-founder. He's a former Thiel fellow, technologist, just a very intelligent, very articulate person. And that just little things like that, listening to him talk and just acknowledging how articulate he was, and acknowledging the cadence of his speech, and using these as clues. So in January of 2020, December of 2020, the business model was not obvious. It really wasn't. It was challenging. They had, at the time, there were only 10 banks on the platform, or maybe less than 10 banks. And it was like, what exactly does that mean? You know, is this Cross River Bank? Exactly what is going on here? And now today, it just becomes more and more clear. And today, it's as I said, it's categorically obvious that Upstart has defined a new category of business that I started calling credit underwriting as a service, or credit decisioning as a service, which I think there are other companies in the market doing it, and we actually like those companies that are doing it. But I said on Twitter today, and it's kind of ironic because credit underwriting as a service is a little bit SaaS. It's usage based. It's not exactly SaaS. It's usage based. But the market's treating SaaS like it's the end all be all. SaaS wasn't popular 6 years ago. SaaS has just gotten extremely popular. I think SaaS will consume a lot of the market. But there are business models out there that are burgeoning in the same way that SaaS did when Microsoft began shifting, in the early 2010s, and as SaaS burgeoned in the mid 2010s. There are business models out there doing the same thing, and I contend that credit underwriting or AI-based credit decisioning as a service will be seen as one of the largest business models on earth.
And why do you think so?
How do I know that credit underwriting as a service is going to be a giant business? I think it's an asymmetric bet. I think it's, we're big disciples of Peter Thiel's thought universe, and I think no great business model appears in the launch period to be that great business model. Only in hindsight is everything extremely obvious. So we have to take bets on secrets, quote unquote, secrets that are materializing kind of right before everybody's eyes, but only in hindsight do they seem obvious. So I think that's a powerful way to invest, but it's really hard. It's an extremely difficult way to invest. And I'm admitting, by saying, you asked me, how do you know it's going to be a giant business model? I think there's, in short, the reason I think it will be is that AI is not AI. Like, I think true AI will be natively built in a blockchain computing environment. That's, I keep talking about blockchain as a philosophy. I think we are in such rudimentary stages of AI that there's huge differentiation that can be created by a team that can execute AI faster than other teams. And, a great example that I use often is Google. Google is the 23rd search engine to compete. And 23rd, it was probably the 150th. It was probably 200. There was people all over the place creating search engines, but 23rd well known, and it might be the 20th, 26th, somewhere in that range. I don't know. And if you look at, I shared a YouTube video on my Twitter. If you look at the growth of these search engines over time, in 2000, Google wasn't the best. It wasn't number one. It was not apparent that Google was going to become the great company that it was. To certain people, it was. To Larry Page and Sergey Brin, forgive me if I'm so bad with names. So I'm extremely familiar with these human beings, with the business and everything. I think YouTube's $1 trillion company by itself, multi-trillion-dollar company for anybody who wants to buy Google. I sold all of my Google, but I do think it has a long runway of growth ahead of it. Massive share repurchase program. Anyway, so how do we know Google? Well, it was either Sergey or Larry. One of them was quoted in saying, "I'm not building a search engine. I'm building an AI." in 2001, 2002, 2003. So it comes back to the psychology. If we're going to take these big bets on early stage companies that are showing traction, the only way, in my estimation, the only way that you can get these things right is if you understand, first and foremost, the psychology of the management.
The part of intuition, I get it. And part of belief in the management, the psychology, their vision, get it. The founders have amazing qualifications. One is person from Google, one is the Paul is, I think, is some fantastic credentials as well. And so the third person, the lady is, kind of has very social consciousness is very high, right? I mean, but in terms of addressable market and all that, have you kind of done some numbers there? Do you see that?
Yeah, well, I appreciate you keeping me on track, because I do have good answers on the tangible business model. So one thing that I feel like investors are not appreciating is the fact that Upstart's business model, and taking it back to Google, like Google's business model, could not have existed 7 years ago. It fundamentally, due to bottlenecks related to cloud computing, compute per dollar, storage per dollar, from a data and workload perspective, techniques related to AI and machine learning, GPU technology. Why wasn't NVIDIA the company that it is today in early 2000? Why did it languish for decades? All of these technologies are coalescing currently to create this really profound shift in the way that society assesses creditworthiness. So when we see it through that lens, Upstart is an inevitability. And I think, I think there's real, I'm trying not to just give you the talking points that management will give, because the management, ultimately it's very hard to ascertain precisely what is going on in these product departments. How the actual, you can look in their S1, you can see all of the artificial intelligence techniques that they're using. You can see the technology, all of this stuff. But I would argue that seen through the lens of Upstart is an inevitability. That's a really powerful way to think about Upstart.
They're on the right side of change. That's what I'm hearing from you. The society is transforming, several secular trends are converging, and it's pretty much right at the spot: AI, machine learning, whatever. But what is the comparative advantage of, do you see the product having a comparative advantage? Management is fantastic, but the product has comparative advantage compared to other products available in the market?
Studying the competitive dynamics of Upstart, LendingTree does not compete. LendingTree is a marketplace. Credit Karma does not compete. Credit Karma is a marketplace. Might Intuit try to in-house this credit decisioning technology? Maybe they will. For now, they won't. We know that it takes, Upstart has said, and it's very clear, especially as evidenced recently by the AFRM Amazon partnership. It's very clear that right now, AI credit decisioning creates a very discernible competitive advantage. We can see this on the LendingTree marketplace. We can see this on Credit Karma marketplace. Upstart is dominating all other lending products in terms of reviews, number of reviews. They're dominating massively, as well as the rating, average rating, they're dominating massively. Also, their default rates, the performance of these loans as they get securitized and sold to Wall Street, those metrics have been discernibly, verifiably better from the evidence that I've seen than their competitors. So, and this, I have these, I would argue that Upstart's business model is completely unique. There's nobody else doing credit underwriting as a service. I think a couple other companies out there are going to do it, and they're going to be giant businesses. I think we're seeing this in China right now. China is unilaterally, there is the massive issues related to just what is at stake. Jack Ma disappeared because of what's at stake here. I would contend that the banks on Upstart's platform will never be shifting to another. Once they're on, it's over. They're on and they're going to be there forever because they get locked in. Upstart knows them better than anybody else will ever know them. To divorce from Upstart and to use another API would require, a lot of time. It would just be a huge hassle. So I would argue that if, you want to talk about moats and Upstart, arguably there's 4 moats in the digital realm: embedding, network effects, scale, and brand. I would argue that the moat that Upstart will have to the greatest extent will be embedding, due to data network effects created by its relationship with banks. So it'll kind of have both of those. And then brand will be huge. Brand is already becoming a moat for Upstart in the sense that, I think they went public because it was very hard to sell their innovative platform as a private company. I think it's easier. I think there's less friction when they say, hey, look, we're a $23 billion public company. You can trust us. I think that creates a smoother sales cycle. And I think we're seeing, Dave talk about it, Paul talk about it. We're seeing an acceleration in the pipeline for customers because there's further legitimacy. The mainstream consciousness is accepting.
Tell me one thing, what are you thinking in terms of the long term? Where is the company going? For example, 3 to 5 years down the line, what's your horizon in terms of, the market cap the company can achieve or the growth company can achieve?
Yeah, I mean, I think I think I just responded in a way that Dave responds because every question that they get, Dave responds, yeah, I mean, but I've just watched so many interviews. I talk about a lot, how.
No, but Luis, what's your view? Leave Dave aside. What's your view?
Yeah.
As independent somebody looking at the company and following the company and seeing the process.
Yeah, I apologize for getting on these tangents. So my view is that looking at Google's growth, I think my view is that nobody really knows, but I think that the company just grew at 1,000%. I think that in my original note, I wrote that Upstart in January, I wrote that Upstart could become an integral component of the plumbing of the US financial system. I think if Upstart hits $20-30 billion in revenue over the next 5 to 10 years, which at the current rate, I think is reasonable. And I think that the opportunity is I think it's bigger than any of us realize. Ant was going to be a $300 billion IPO or $400 billion IPO. And how is it creating all of this value? And it's one answer. It's AI-based credit decisioning. So I think number one, it's a lot harder than everybody realizes. It's there's going to be other people that try to create something. And there might be a duopoly or an oligopoly in the space. I think a lot of fintechs will end up just capitulating and deferring to these credit underwriting as a service companies. I think Twilio is an interesting example in the sense that in its early days, it was seen as a commodity product. Uber dropped them. And, today Twilio is a juggernaut and Uber is a customer of theirs again. I do think that the opportunity is much larger than what Twilio. I think there's less competition and the opportunity is larger for Upstart than for Twilio. Communication platform as a service, there is a good bit of competition there.
So what I'm hearing from you that Upstart is basically a generational opportunity when it comes to AI-based credit lending.
Yeah, I definitely believe that.
Okay. And do you have any price target in mind, Luis, for Upstart, let's say?
Yeah, well, all right.
Look, these are all probabilities we're talking. Yeah. But Luis, I think it helps to where we're going, right?
I would say that I think the market will price Upstart at 20, 30 times sales. And the company will do at least 7 to 10 billion in revenue by 2025.
So so how much does it translate to market cap?
If they do 10 billion by 2025, that'll be a $200 billion market cap.
And now it's about 20 30 billion.
And considering that Upstart just did more free cash flow last quarter than Shopify at a market cap of 200 billion, and arguably that the market, the TAM for Upstart is larger than Shopify's, I think it's reasonable. I think Upstart could become a company of, I think it will become a company of that size. Yeah, I just think there's so much compelling evidence for that. I think they'll have, by that time, they'll have 300 to 500 banks on the platform globally. They'll do $1 billion in revenue, estimated $1 billion in revenue in 2021 with 25 banks with one flavor of credit in only the United States. Prodigy is going to be a giant asset that's already operating globally. They give the software away for free. They monetize it through loans. The AI gets smarter based on those. I mean, if Upstart
what we are looking for, Luis, is 20 billion market cap right now, 25?
About 23, 24.
23. And if you're looking at 200 billion market cap by 2025, you're saying is it 10 billion in 5 years or 4 years? That's an opportunity we're looking at.
I think that's reasonable.
You don't think, Luis, the stock has run up quite a bit? It's still an opportunity to buy at 260 or whatever, 250.
Oh, 100%. I bought more at 247. I bought more at I took a big bet on it in the 50s and was planning on just letting that ride. But I keep looking at it, and the growth is so significant that and the growth is so significant, and the opportunity continues to be so compelling, and the pipeline of banks continues to grow, that I'm still very much bullish. I bought more, which is that's a huge vote of confidence, and from my estimation, because I'm already so overweight. Nothing is guaranteed. It's you use risk management through diversification is my personal philosophy. And then once you have a winner, just let that right. I don't personally subscribe to the traditional or the conventional ETF or hedge fund management style where they trim winners to reduce concentration. I believe in just creating a stable of companies, and allowing the winners to just win massively.
But last thing, I think let's do a bit of a, fire question round. I'll just ask a couple of questions and then let's see.
Keep them short. I'll keep my answers short.
Yeah, no, it's all right. So choice, Upstart versus Tesla.
Oh, Upstart all day.
Upstart versus Google.
Upstart all day.
Upstart versus Roku.
Oh, Upstart 100%.
Upstart versus Square.
Upstart, without a doubt.
Upstart versus Open.
It's tough. Open Door is an exciting company, and I think they have similar psychology behind the company. I think Eric.
Pick one, Luis.
Oh, okay, yeah. I'll go Open Door because it needs love. needs, the market just thrashed it.
No, I'm not talking about your
No,
sympathy and
I'll
empathy.
go open door. I think people are going to be surprised by what open door will be. I think open door, I was thinking about it today. I think, you know, just as a funny aside, OpenSea is this NFT marketplace, and it's
Yeah, I
like
saw your tweet
open
this morning.
door. It's
I
like
saw your
open
damn
door,
tweet
and
this morning.
yeah, I'm very interested. It's like open door and Sea had a baby, and OpenSea was born, and they're all three marketplaces, and it's really interesting. And I think open door could adopt some similar model. I think titling, I think land titling, I think a lot of government functions, I think a lot of real estate functions will be put on blockchain technology. It'll be natively built in, you know, an Ethereum computing environment or something like that. I think
I get that. I think Open Door will. I wanted to chat with you this time, but we'll chat probably next time. Now, two more: Upstart versus Blend Labs.
go Upstart. I like
Upstart,
Blend, but we'll go Upstart.
Upstart versus Affirm. Is it Affirm or?
Oh, well,
Pick
it's
one, Luis.
hard because it's hard. That one's hard because a firm's keeping all of its cards close to its vest. We don't know what a firm's going to look like in 2025. Their Max and the Affirm team are not revealing. I know for a fact that they are not publicly articulating what they're up to. It's a tie for me. It's a tie because I think they both have really massive visions, and they're both kind of operating in the same space.
So I think, Luis, it's a good time to end the interview with a commitment from you that you come back again and we talk about Open Door and Affirm.
Oh yeah, well, 100%. I've really enjoyed chatting with you, and hopefully the viewers get as much value as I've had fun being here and being able to share these ideas.
Yeah, no, I think you're look, my faith in Upstart has gone up because of you now. I'm going to put more money.
That's what this is about. I'm telling you, it's not about the stock picks.
The whole thing about consciousness and the values and the societal evolution. I had it just in my mind, but I think you helped me bringing it together. And I think market is closed today on Monday. Otherwise, I would buy more Upstart. So I'll wait for Tuesday. And first thing I'm going to do is buy the damn Upstart, Luis. Okay. We'll chat again, mate. Thank you so much.
Thank you. I'll talk to you soon.
Bye. Take care.